Hey everybody, welcome back. Well, the obvious is that we did not get through 4,400 as everybody knows. What we're doing is we're getting Doji City up here. You can see it now, 1, 2, 3 dojis are what we're getting. It's not the end of the world. I think it's kind of interesting that we're this overbought and that we're not seeing any kind of roll. Now, we're not obviously overbought in this section, and we all know that, but you do have this higher high, and I think that's important to note. You already have the higher high, and you don't have it here. This is actually called a positive divergence, and it's something that I like to see. It usually means eventually that this does get taken out. It doesn't always work that way. As we know, RSI is not gravity. It doesn't work all the time, but it's certainly something that I pay attention to and would suggest that you pay attention to it as well. Now, we have a ton to go over with the earnings that are out tonight, the key levels that we held, the bond auction today, and essentially what I want to just start with is I use a 55. Some people use a 50. I would suggest you just use what you're comfortable with. Look at how we're holding above there. And we're just having a really tough time even breaking it to the downside. Now, what's significant about this is that's the exact opposite of what happened before. Well, what do I mean by that? Well, if you take a look at this level right in here, what happened? We broke it, couldn't get above it, and then it becomes resistance. So what we do is we have resistance. And before, you can see it here, resistance, resistance, trying to become support, but never really holds. Whereas here, it's support over and over and over again. This is actually backward flipped in April after being below it for a period of time after we thought we were going to lose every regional bank in the world. And then it tries to get back up there, and it can't. So here we are now, and it's starting to become support. Let's rephrase that. It's starting to look like it's becoming support, and that's how I'm treating it. I would be watching all these lows. Are we going to take out these lows? If we start taking them out, 43.75, 43.66, 43.64. Like, you're not even close to taking those out. Take a look at this. This is what they've been doing in the market. They've just been stair-stepping the whole way up. I mean, it's absolutely staggering how clean this has been since November. All you're doing is just stepping up over and over again. And so for us to look at this and say, well, it's clearly going to pull back. Is it? I mean, we don't really look like we're going to pull back, do we? We kind of look like we're stair-stepping. So if you take that and you overlay it with something like the RSI, you'll note a couple things. We were overbought. We worked off the overbought, and now we're just back to a net position. Now on the 4-hour, not so net. You could start seeing that we're starting to roll a little bit and break a little bit here, working our way off, but we're not really breaking down. And I think that's a very important distinction. There's a couple things that we're going to go over here, but I really just want to hammer this point home. We should be falling off a cliff on these pullbacks. These pullbacks are completely frustrating all the put buyers, and it's completely frustrating everybody that's shorting stock right now. We're just very simply not rolling over on the ES. And it's been a long time since you've seen this kind of action. I'm pretty curious to see people's responses to what I'm going to show in the comments once I show it. So just be aware of it. I think it's pretty telling, and I'll walk through it in detail. But let's get through this first, and then we'll dive into that, because I really want people to get that. I do want to go through the earnings, but you just need to be aware of a lot of things that are starting to line up to something that happened 20 years ago. So if we start looking at these levels and how we're acting right in here, you're holding. You're on the 4-hour. You should be cracking. You're not cracking. You're doing the exact opposite of cracking. You're annoying people that are shorting because they keep waiting for the, quote, crack. You know what's not happening? The crack. So what does that mean? Well, it means eventually it may, but I don't think so. And now look at us. Look at the DTL. DTL stands for downward trend line. And all we're doing is just riding that wave. Now, if we drill into this and we look at this level really, really carefully, we're going to get the obvious, right? We're going to get that cup and handle that everybody sees and that we talked about maybe a month ago when we were comparing it to what's going on in the Nikkei. I'm just going to drop it in there, make it real pretty. And then what we will do is we will clone these lines and drop them over. I know people don't want me to clone the lines. They want me to use this tool that's over here. That tool is god awful. By the time I'm done that, I can clone the lines. So this is where we're at, and this is what's going on. The question is, what's next? What should we really focus on here? Well, what we should focus on is the following. We should focus on this as a cup and handle, and we're trying to break out of it. Are we going to? We don't know. We could look at this and say, it looks that way, and what are we using to gauge that? Well, I'm just looking at the RSI, and I'm looking at this as support and resistance lines, and that we're already over, and that would solidify that I'm probably have a real good chance of getting through this and pushing. Now, earnings that are out tonight are fairly good, and they're responding favorably. But I do want to walk everybody through something, and so what we're going to do, reset the chart and pull down the S&P, and I want to get rid of RSI. So 4400s are a nemesis. I'm not really adding a lot of value there on the ES. We all know that 4400s are a nemesis there, so I'm not really going to spend a lot of time on it. it. With the SPX, what I want to focus on is what happened yesterday. 1, 2, 3, 4, 5, 6, 7. 7 days where we were green. You were not green today, just FYI. Technically, when the S&P closed here, we were not green, we are red, and it's based upon a hair, but it's there. You opened at 84.37 and you closed at 82.79. Just be aware of that. It's there. It's more of, to me, of a dragonfly and a hammer sitting at the top of a trend line than anything else. First time fails, second time usually pushes. Keep that in mind, do what you want with that. All right, so this is where we're at. And we're right against that level, and I counted 7 down. Now watch this. Come from that low and come over. When were you here last? Okay, it's been over 100 days. Do you know the last time that this happened where you were down over 100 days and you bounced over 7 days in a row? The last time that this happened was 2003. It happened right here. And this was the war, and everybody thought that the war was going to be the end and that we were going to be in a position where we were just going to roll over. And you can see right here how we had these higher highs. We had a neckline right here as well. I mean, you can't make this up when you compare it. I'm going to get into this more on Saturday, so make sure you subscribe. But I want people to get this, because this is what's happening right now. This is exactly what we're dealing with right now from a technical standpoint. There's a lot more similarities that we'll get to, But you have a neckline right here, just like we're dealing with a neckline right now, right around the same exact spot. And that's what I'm saying. Like you literally can't make this up. Here, I'll just draw it in real quick. You can see. So here's that neckline. And then at the same time, 1, 2, 3, 4, 5, 6, 7. I mean, if you didn't think we were in a simulation before, look at what's happening right there. It's absolutely crazy. And I think that that's something that we certainly must. You can't ignore that it's there. So it's certainly something that we must pay attention to. And I can't stress that enough. I'm definitely paying attention to it. So now that we know where we're at and we know that there's some similarities, I'm going to point out the other similarities that are going with it, and then we're going to go forward. I remember this time specifically, and I'll tell you why I remember it. I was short, but here you are, and that's a 100-day low, and then followed by 7 up days. I was short and I was miserable into this because I couldn't figure out how we were going to have all these. I remember it distinctly because I couldn't figure out how we were going to have these wars and how the market was going up. And then I figured we were going to have all this oil because we were going to control the Middle East. Meaning we, the imperialist American. And so if you take a look at this, look at that. I mean, you can't make that up. 153 days there, 104 bars. So here we are, and we can see how we lifted right up in here, and we can see how this was. And I was net short the whole time through this, and then all it did was exactly what's happening to us now. It just kept grinding and grinding and grinding. Now, in hindsight, people say, well, it's a very different time. I'm not telling you everything's exact. I'm telling you technically right here, right now, you need to take a look at that. And when you do take a look at that and just realize how glaringly obvious that area is, it's certainly something for us to pay attention to. Now, when we compare these, I'm going to walk through it one more time so that you can see this pretty clear. You could say left head, right, and yep, I get it. It's a little over. And then you can see it here, left head, right. This is your neckline. And then you can see the break of the neckline right here. You can see here as well. You can even say it's there. And then you drop not 1, but then you drop 2, right? And then you just go it again, 1, 2, and then you rip. And this is where you are in comparison to this. The similarities are absolutely glaring. Now, we'll get more into that later this Saturday. Comment on that. I'm really curious what people think of that. Apple. It doesn't get any clearer, guys. Here's your undercut right here. Here's your higher high. You have a double bottom that's put in. That does not mean that you will not pull back. Some people seem to think that when I point these patterns out, they seem to think that that just means that it's going to miraculously just go up forever. That is not what it means. It means that you've solidified a bottom, and you've solidified your bottom in Apple right here. So when you realize what that means that if I think that, a lot of other people think that, because you're looking at the technical. Remember, we have the stool, and we have 3 parts of the stool, as everybody remembers. You have your macro, your fundamental, and your technical. Technically speaking, everyone's going to look at this and say that's a double bottom. It's you undercut, you close over the previous high. Congratulations, you have a double bottom. Does not mean that it's just going to miraculously go up. But if it does come down, you're more prone to have buyers now than you've had before. So people will be more prone to be dip buyers now than they were previously. All right, something to think about here. But the action in this and the way that it's lifting and the way that XLK is lifting is really very impressive. Matter of fact, XLK is leading the S&P right now. Now, I put this in the private video or the private newsletter. If you are on the wait list, please take a look. You're going to get an invitation maybe this week or next week, and then the community's closed to the end of the year. We're going to close it for enrollment. If you want to be on the wait list, link in description, or I will pin the comment in the comments, and let's just keep going. So you can see the breakout of the handle right here. This is what we're dealing with. 45% of that is Apple and Microsoft, right? They're the holdings. We hit all-time highs. This provided a really nice trade for us this morning. I will review a couple of these trades I have outlined. I had someone help me and cut out some of these trades so that I can walk through them, but this provided like a really nice trade today. A couple of these provided like really nice just gap trades this morning that were a lot of fun to play around with, candidly. The one that really looks next that they're trying to break out here is NVIDIA. They're really trying and they're pushing. We have a swing on in like the low 430s, but they're trying to get through here, guys. I was showing this to people today in the pre-market public video, and I would suggest that if you can watch those, even if you can't watch them at the same time, I just want to get everybody to understand this. So when you have something like NVIDIA and you see how you're broken down here, one of the things you can do to really understand where the volume is, go to settings and then change the number. So in this case, I'm going to take it to 40. And what this is going to do is it's going to divide these numbers into different sectors. Then all I'm going to do is just pull this back so we can talk about it. So one of the areas that we wanted to watch this morning was this. And we said, if we can get through this, we're going to push. Well, NVIDIA had a really good morning and you pushed. If you can get above the rest of this, you have blue skies. Now, why am I showing you this? I'm showing this because if you're using volume profile, you want to spend some time learning how to split it up. In other words, you don't need to have those big, nasty bars. You can have thin, divided bars that give you more data and help you make more informed decisions. There we go. Okay, let's just do it this way and save ourselves an inordinate amount of time before someone drops a nasty comment. You see how thick that is right here? So if you change that, you're in much better shape, and that's really what I would focus on. I would focus on how are you going to change that and make it more to your advantage, just so you could use it and really dive in there. At least I make myself laugh. But you can see what I'm going, where am I going with this? Okay, here's where I'm going with this. Look at DraftKings and look at what happened when DraftKings got into the void, right? It was just an absolute layup. Learn how to use that. It's a great tool and understanding, because sometimes people will trade something and they'll go, I don't understand why it's moving so fast now. That's why it's moving so fast now. DraftKings acts really well. You've got some other names that are setting up to break out. Tesla is probably just the stock that is driving everybody absolutely crazy. I've been on both sides of this. I'm doing okay. I'm actually doing better on the short side. And I want to go through a couple things so people get this, especially people that are newer, because I'm reading the comments and I like the comments. You do not have to agree with me in the comments. You will not hurt my feelings. I've been trading for over 20 years. It's going to take a heck of a lot more than that to hurt my feelings. So, if you disagree or agree, drop it down. There are things that I don't know. There are things that I'm going to miss, and I'd rather hear about it so I can make corrections. And maybe you have a thought process, and maybe it's better than the way that I'm viewing something. I have zero problem with that. My goal is to make money, period. And there are experts, like even in the room, we have people that are very tuned into the medical field, in oncology, and they know those drugs better than I do. You have people in there that are semiconductor equipment researchers and engineers, way better than me, saying I think AMAT's going to do X with this, this new equipment. They know exactly what it's going to do. So I find it helpful. So please comment. But with something like Tesla, when you're looking at it, that's a battle. That's a real battle going on there, and that's something that you have to pay attention to. As long as I'm above the 200, you're okay. You're riding that 200 and you're holding in there. So you have to be cognizant of that. You have to respect what's happening there, and it is what it is. I keep waiting for the rotation. And I think, I'm wondering, I'm in my late 40s, I'm wondering if I'm going to be in my mid 50s by the time it happens, but that's a joke. So what I'm not getting is, I'm not getting that rotation yet. Like I popped, but I should be going in the small caps. I think we're getting there. I think we're just simply backfilling and setting up. Small caps benefits the most than any other sector from what's going on in the bond market. And as I said yesterday, if it moves, I can chart it. This moves, I can chart it. You had pretty much the biggest auction of the week, if not the rest of the year, that happened today. You had huge amount of supply of the 10-year auction today at 1 o'clock today. And look at what happened. You can see how you pulled back. You can see how you broke the 55 and closed below the 55 for the first time since you popped above it in May. I don't care if you don't chart the yield. I do. People will comment, oh, you're not supposed to chart yield, you're supposed to chart bond prices. I don't care. I'm charting the yield. So you can see how you broke right here. You could see your cross that's coming down. You could see you broke right here as well on the RSI. This is going to roll. If you break 450, the floodgates open. Everyone's going to wonder why they didn't lock in rates. Everyone's going to pull money, listen to these words. Everyone's going to pull money out of their money market account where they're saying, oh, I can just leave it in here and get 5%. Well, guess what's going to happen if the bond market keeps dropping? You're not getting 5% anymore. They're going to start locking it in. Maybe you're not going out 10, but you're going out 2. You're at least going to go out 2, right? Maybe you're buying 4-week paper, 8-week paper, but you're buying paper now. You're going to sit there and watch that money market yield go away until you're in the sub 4s when you could be locking in money like this, right? And this is still decent money, really decent yield. So keep that in mind. That's really significant for us. And something that is, that's still weighing on the ES, but 4,400 on the ES is really what we need. We know that. And then we're watching the dollar, and the dollar is wrestling with the 55. I use a 12, a 22, and a 55. Keep that in mind. Now, before we get into a couple of these names, there was something I wanted to show besides the volume by price. One of the guys in the room today asked me how I could determine relative strength. I'm going to give everybody a real quick tip how to do this. So in front of you is the SPY in line form. And why I'm doing line form, and it's a 1-minute chart. I want to show you a really quick way that you can tell for the day how something's behaving. So if this is the SPY, and let's say there's a couple names that I'm interested in, and I want to see which one that I want to play. So for example, I run this scan all the time in the middle of the day, and it helps me out greatly. And I wanted to play NVIDIA. And the thing that I was pointing out to people, I'm like, NVIDIA has high relative strength. So what you're doing is you're taking it from that 930 level and you're seeing, are we outperforming the S&P? When the S&P pulls back, are we pulling back as much? So you're looking for a couple different things. Number one, what you're looking for is S&P took out a low, right? Did NVIDIA take out a low? No, NVIDIA's low is right here. Okay, so what you're doing here is you're comparing that when the S&P took out the low, you could use the NASDAQ as well, whatever you want as your guide. NVIDIA did not take out a low. If you have 5 or 6 names that you're watching and you're not sure which one you're supposed to go long, if the market's rising, or you're not sure which one to go short, you can inverse this. This is the fastest way intraday to sort your ideas. There's nothing faster that can tell you where the RSI is. You can go read all the relative strength you want on all of them. I have MarketSmith and all those tools too. They're not going to give you intraday readings that are going to change. Your readings on on relative strength are going to change predicated by what happens intraday. This is a really quick way to get a snapshot. And then you could look at it and go, well, do I want to buy that or do I want to buy Microsoft intraday, right? And then you could just even compare them line by line and go, well, at this particular time, the way that this is acting, I'd want to buy Microsoft. But if you leave the SPY in for a second and then you go through this and then go, well, how is the SPY doing in regards to Microsoft? Okay, well, I'm still doing better. I didn't take out the lower low. All right, but I really want to see which one's doing better. Okay, NVIDIA is doing better. And you can literally sort everything that you want this way. You can just keep adding names to it and just figure out where's the money going. Well, maybe AMD is doing better than NVIDIA, right? And then you look at that and go, we're just dropping that down. Here it is in blue. No, it's not. Okay, so it's not just the stocks. And then you could also just go, okay, AMD's blue, Microsoft's light blue, NVIDIA's orange. Well, let's just pop the stocks in. How's the stocks doing intraday? I keep a graph like this. Let me clean all this off. I keep a graph like this all day long. It's the easiest way to sort. Fastest way to sort, you could see, okay, so if I wanted to know which name I'm going to play in semis today, which name are you playing? Are you playing AMD or are you playing the stocks, right? Well, on the stocks, if I want to play semis, what am I doing? Now, you can go back and look at this and go, well, let's say that I wanted to do this on November 1st to the 2nd. I'm not going to cap this, but you get where I'm going with this. I wanted to play AMD. I didn't want to play NVIDIA. Think of the amount of money that doing something like this, the amount of alpha that you can generate doing something like this, and consider doing it. Now let's get to some of the names. We're going to focus on some of the earnings that came out. I think that's what's most pertinent for tomorrow. Rivian was not a bad quarter at all, but we did sell down, and I think that is something that we definitely have to pay attention to. Why did we sell down? There might have been something that they just didn't like. It doesn't really matter. Bottom line is you undercut, and now we just need to see if we can start making some higher highs. I'd probably use the anchored VWAP tomorrow just to see where we're at. That's not the one I would use. I'd use directly on that bar. That's going to give me the same line. Okay, let's get rid of that anyway. So I'd make sure that we're above that, which probably puts you about 17 and a quarter, or watch this doji, which is probably going to get you right around that same level, and seeing if you can get there, seeing how it acts. But I didn't think this was the worst quarter in the world, and I'm somewhat surprised how the stock acted. Now, UPST was an absolute disaster and couldn't get up off the ground. I would watch this again tomorrow and see if this has follow through to the downside. I do think that analysts just absolutely threw in the towel here, and I don't see really a tremendous amount of redemption for this name. So this is definitely another one that would be on my radar to see if you have follow through tomorrow in that name. Now, AXON, you're seeing a really nice at the high breakout. A couple guys in the room were trading this one today. You can see where you're closed at, and you're up there. You're still up there, and you still have some work to do, but you're setting up very nicely, all-time highs. If you could close above all these wicks, you can lift here. So this is definitely another one that's on the radar for tomorrow. I'd like to watch, see how this goes. And we're really just watch that DTL. Well, really not, more of an upper channel, isn't it? So if you take a look at that, that's definitely an area of interest that you're going to watch, see if we can flip. And then, of course, you have what happened this morning, and then you have what happened tonight. And I think we should just focus a little bit on what happened tonight and what's going to drive the market tomorrow. Well, you have an AMC, and AMC is doing AMC things, to say the least. Where you're up $1 after hours, and now you're back to flat. It's still hard to borrow, believe it or not. I don't know what you're going to get out of this. From my perspective, listening to the conference call, I just don't see a tremendous amount there that I even really have that much interest in. There's other names out there after hours that absolutely did exceptional. This was a really good quarter, cutting costs for Disney. You still missed on the revenue side, but it wasn't a disaster. Let me show you this on the 15-minute up, and let me just show you this with the extended as well. So if I look at the extended hours, and I just marked off the 50% line, which I would suggest that you do, and then here drill into this on a 5, and you can see where you are with VWAP and how VWAP's in there. You can see very clearly how this is playing out. And now this is before the call, but everything's holding right now. This was something I actually traded after hours and did quite nicely with. And I would watch this tomorrow. This was not a bad call at all as far as an earnings call. I'm interested in the conference call. I have not listened to the conference call at the time of that, but as far as the earnings report is probably how I should refer to it. I don't view this as awful. Now, if you take a look at Disney, you're above the 12, the 22, and the 55. You should use whatever you want and whatever you feel comfortable with. Disney, you're not even getting to the 200 till you're all the way up there. So something else that we need to consider, and something else I really like. Now, Twilio, you've been all over the map. If you take a look here, you absolutely crushed it on the earnings. Absolute crush on the earnings. And that's definitely something that I would be paying attention to for sure. Now, if we just clean that all off and look at that 50% line, look how you're holding in there. It's something else that you might want to add to your repertoire when you're trading after hours. You don't get to use that word too often. So you can see how you're holding in there right along with the VWAP. See how it goes. Have not listened to this call, have not seen it. There's a couple others that are moving. Hubs after hours, but super thin, got right to resistance. Mara is one that people love to play, and you can see how that's acting. And I do think that this is something that people are going to want to watch, especially watch this tomorrow, because I'm really curious what they have to say about this. And what we're seeing after hours is you're starting to see Bitcoin lift. And I want to be real clear about this. The SEC coming out and saying that they're willing to meet with GBTC to discuss this spot ETF for Bitcoin is really interesting, that they've actually said, yeah, well, we're willing to meet. Promising. Not only is it promising, but it means that the Bitcoin names could have a pretty big day tomorrow if you read what they're saying, because you're going to need more of them, especially if they're going to do this with the physicality. And of course, everyone has their favorite Bitcoin names, and I have mine. That's it.